So precious metals are exploding, and in today's video, I will share with you what I'm doing with my gold and silver positions. You see, I've been holding these positions for quite some time now, since 2021, and as you can see here on my screen, I'm already 175% up on gold and 318% on silver. So the question now is, what should I do? Should I take profits? So that's what we are going to discuss today. First, I will summarize in a few words the precious metals investment thesis. Then I will show you 3 charts. I will show you 3 ratios so we can get a sense of whether gold and silver are still cheap or not. And lastly, I will share with you what I'm doing with my positions, how I'm thinking about them. In any case, before we begin, as always, nothing in this video is investment advice, okay? And with that said, let's start. So first, what is investing in precious metals all about? You see, for me it's very simple. Investing in gold and silver is simply a bet on the idea that fiat currencies were designed to fail, designed to lose value over time. And why is that so? Why are fiat currencies set to go down? Well, because what is the incentive that drives almost every country, every government out there? The incentive is always to spend resources, to spend money. Every government wants to spend because that's how it buys popular support. So, if you are a dictatorship, you need to spend, right, in order to stay in power. And if you are in a democracy, you also need to spend so you can win the next elections. So governments are spenders by nature. And you see, governments can spend a lot for a long time. For instance, they can do that by taking on debt. However, there comes a point where debt gets so big that eventually the government needs to start printing money to pay it. And that's when the currency gets destroyed. And well, if the currency goes down, gold, silver, and hard assets in general tend to go up. In any case, this is what people who invest in gold and silver are counting on. Basically, they're betting that governments will end up destroying the value of their currencies, because that's the incentive that drives governments out there to spend. So that's the main idea. Usually who invests in precious metals, usually these people are counting on that, on this idea that the incentives that drive most governments out there will ultimately fail, destroying the value of the currency. Now, with that said, let's now cover whether gold and silver are still cheap, even after the massive recent rallies. And for that, our first chart is this one, the S&P to gold ratio. Now, what does this chart tells us? It shows us how expensive the S&P 500 is when measured in gold. In other words, if this chart is very high, like if this chart is here, that means that the S&P 500 is very expensive in gold terms, and vice versa. And well, as we can see here, this chart is currently at quite high levels. I mean, we are not at all-time highs, right? However, we are in the upper third of this range, which suggests that either the S&P 500 needs to go down or that gold needs to keep going up. So for this ratio to normalize, to revert back to the mean, which is around here, right? So for this ratio to normalize, one of these things would need to happen. So that's why, for example, between staying positioned in the S&P 500 and being invested in gold, I prefer the latter. So that's why I prefer to stay positioned in gold. But no, even after the recent rally, gold doesn't seem expensive. That's the conclusion, at least, I get from looking at this chart. In fact, gold could easily continue going up, according to this ratio. Now, our next chart, our next ratio is this, the gold to monetary base ratio. This ratio compares gold reserves to all the money circulating in the financial system, including the reserves created by the Fed. So in other words, this ratio tells us whether gold is undervalued or overvalued relative to the expansion of the money supply in the system. Okay? So when this ratio is low, as it is right now, that means that gold is cheap relative to all the money that has been created, which is exactly the case here, right? In fact, you could argue that gold has never been cheaper if you exclude 2015. But yes, you could argue that gold has never been cheaper when compared to the monetary base. So, if gold is cheap in relation to the S&P 500, it is also cheap when compared to the monetary base. That's why, for example, that even now, after gold has already gone up a lot, I will only sell my position knowing exactly what to buy next. Because for me, it simply doesn't make sense to sell my gold just to hold dollars. And lastly, our last ratio is this one, the silver to gold ratio. This chart here in turn shows us how much silver costs in gold terms. So, if this ratio is at very low levels, that means that it takes very little gold to buy silver. So that means silver is cheap. And as we can see here, until recently, silver was extremely cheap relative to gold. But, as we see here, that gap, that difference has already closed for the most part. I mean, I think we can say that today we are basically trading around the average, right? So I think it's fair to say that silver is not extremely cheap anymore. That doesn't mean silver can't keep going up. After all, as we've seen, both gold and silver are still cheap when you compare them to the S&P 500 and to the monetary base, right? But the message here is that silver is far from being a hidden gem at this point. Now, taking all of this into account, the question is, what should I do now? I mean, should I sell my positions? So here's what I'm doing. This week, I made my first partial sale in my silver position. Regarding gold, I haven't sold anything yet. But honestly, after these metals have gone up so much, my instinct is to take some profits and invest in other assets. Because I really don't know how much upside is still left in gold and silver. The problem is, if I sell my silver and my gold, what do I buy? Because if the alternative is just sitting in dollars, like I said before, I would rather stay in gold and silver. I think that's safer. But that's the key question. What to buy? And I do have a few options. In fact, I've already placed 2 buy orders. So first, my plan is to increase my positions in Reclaim, ticker MyIDF, and Edcore. And those orders are already in. They have not yet been filled, but they have already been placed. And MineHub too. If MineHub comes down a bit, I would certainly like to add more. I would also like to buy more Oracle shares listed on the TSX Venture to get exposure to copper as well, because I think we could see a rally in copper very similar to what we saw in silver. Okay? But with that said, to be honest, the number of good opportunities that I have right now is still quite limited. I'm actively researching other companies to potentially buy. I'm actively researching other stocks. But for now, these are the options I have. Reclaim, MineHub, Edcore. I'm already satisfied with my Assertio Holdings position, so these are my options now. So that's why I only sold a small portion of my silver position, because to build these positions, which are 2 or 3, right? I don't need to reallocate all of my capital at once. So to wrap things up, what's my plan? So my plan right now is to gradually sell down my gold and silver positions and diversify my portfolio into several smaller positions. I want to reduce concentration because I'm heavily concentrated in my portfolio. 3 positions are accounting for more than 50% of the entire portfolio. So yes, I want to reduce concentration. With that said, I still believe gold and silver can continue to go higher. After all, as we've seen, fiat currencies are likely to keep losing value, but at the same time, I'm already satisfied with part of the gains I've made, and I've already started reallocating some capital into other positions, into other assets. That's it for today, and see you next time.